In this lesson, we are going to learn proper risk versus reward in day trading and how to apply it as a part of your strategy. The specific topics that we are going to cover are the importance, ways to measure, good risk-reward ratios, finding setups, and proper choosing, and how to apply all of those. The most important aspect of risk and reward trading is that you are trading with a set plan and not just winging it. Without this, you'll find that you'll be in many trades you otherwise would not be in. However, there will be times where you may make a trade without the time or the ability to set out a specific plan, but that is for another lesson. There are some key ways to measure risk-reward in trading, but in this lesson, we will just be using this chart. On the chart, you can see that it is overextended, going from under 50 cents to over $3.50 in 1 month's time. We are going to use the 350 level as an entry point for a short trade, using a previous day's range candle as the guide. It would seem the average daily range for a candle is 30 to 40 cents. Our goal in this trade is to make 60 cents a share, risking only 30. This is an example of a 2-to-1 risk ratio. Another way to measure your risk-reward profile before you enter a trade would be to use previous support and resistance lines as a guide. In this chart, we will be using the 260 level as a guide for support on a breakout trade of 280. As you can see, this can be applied twice on this chart as shown. Once the stock breaks over 280, we can then risk accordingly based off of that 260 level. Good risk rewards are often subjective based on many factors, but for this lesson we will stick with any risk reward over 2-to-1. Essentially what this means is that if you're looking to make $2,000 on one trade, the most you should be risking is $1,000 on that trade. For the remainder of this lesson, we are going to do some rapid fire charts. I will pause for 5 to 10 seconds between charts so you can practice on your own finding at least 2-to-1 risk-reward trades, either on the short side or the long side. Here we have an intraday chart of Facebook. Now see if you're able to find the best risk-reward ratio on this chart using all available trend lines and support and resistance. The best risk reward that I was able to find on this Facebook chart is in the falling wedge pattern with the risk just above 166. Once the chart breaks over that 166.50 level and holds there a few times, you're able to risk any amount you would like based on that level just above 166. I would give this a risk of 30 cents and the potential gain of over $1 on a new high of the day breakout. Here is a chart of VERI. There are two good, very defined risk-reward short trade setups that I see on this chart. See if we were able to find them as well. The first short would be on a break of the uptrending wedge with a risk on the high of the day. I wanted to use this chart to give a great example of how range can affect the actual dollar risk that can be involved in a trade. You would be risking $5 per share on this short, but with the potential of a $10 reward. It may not be easy to see on this intraday chart, but if we zoom out on the daily, you can see that this $5 risk may very well be worth it. The next short trade, which would provide a little more certainty and less overall risk, would be on the multiple resistance failures of the $54 level. You would be able to risk from two areas, either the $55 level or the higher $57.50 level with the potential of a new low of the day as your reward. Here we have a chart of Roku, which is a fresh IPO. With this chart, there is zero history while the stock is trading during the day. I'm able to find two well-defined long setups on this chart. See if you're able to find them as well. The first long setup, giving at least a 2-to-1 risk reward, is on the 1850 breakout with a risk of about 60 cents. And based on the previous range with the stock, the reward of at least $1 to $1.50. The next long setup is on the breakout of the 2150 level with a risk of 50 cents and a potential reward of new highs of the day. In this lesson, we learn the 5 key basics on how to set a good risk versus reward on your next upcoming trades.